Hey everybody, good day and welcome to the market recap bias report here on Sunday, July 30th for the week ahead. Diving right in, markets are still bullish, unbelievably, but we got a lot of really good economic data this past week that just blew consensuses out of the water and is showing the economy is still holding up a lot stronger than any economists predicted. So full steam ahead at this point. We are at the top of the range on the S&P 500, trying to break out right now of the consolidation pattern for the last about week and a half. If we do break out from this little stock in a box right here, we do have some slight resistance at 46.31. Next resistance zone would be up to about 47.40, and then we would be pushing to all-time highs at 48.08 and 25 cents. So if we kick this out to a weekly chart real quick, you can see the all-time highs up here. And on the weekly, the MACD and the RSI are still pointing bullish. We are in kind of exponential up right now. This won't last forever, but for the time being, stocks are saying, hey, we are still going. We still have momentum, and you have to be positioned bullish right now, despite fears of being at the top of the market. When you're dealing with being at the top of the market, stop placement and choosing specific stocks is very, very important. You want to make sure that you have good risk to reward and good pattern setups for that. So this is not the time to be a hero and just YOLO it. You want to be very, very specific and targeted on your approach and have very good stop management and risk management. If we look at the daily, however, I said the weekly was still showing bullish. For the last couple of weeks here, I've been pointing to some divergence in the MACD and RSI. We still set a lower pivot, just barely, barely lower. Over here, we had a high of 76.62. And over here, we had 75.77. So even though that's a very small decrease, it still is showing a decrease on the RSI. So I still have some caution in the S&P space, and actually you're going to see very similar in the NASDAQ as well. And then the MACD a little bit more pronounced. This one you can actually see the negative slope on it here. Even though prices are going higher over this time period, we have a negative or decreasing momentum environment right now, and that shouldn't be any surprise here, right? If we draw kind of the line of best fit, you can see the decreased momentum on this trend line versus, let's say, this trend line. Obviously, this one is much, much steeper, right? So we have decreasing momentum coming into a big consolidation zone. The moving averages have caught up. So to this point, it does look like it's going to try to break out, though, like I said, I'm pretty hesitant on the S&P 500 in general, and also going out to the NASDAQ, very similar read. A little bit more slowing momentum. We had a bigger pullback here. We did end up consolidating on the rising 20-period moving average for a while, and we are still very much so in this consolidation range. A double top here where it comes back up, hits roughly the same high and stagnates wouldn't surprise me. But again, we are still in bullish run, and we are not very far away on the NASDAQ either from the last all-time high out here. At this point, my base case on both the NASDAQ and S&P is that we are going to try to come up and actually hit all-time highs here in the next few weeks. It wouldn't surprise me with how aggressive the buying action has been, and knowing that even though it is absolutely nuts to have gone 30, almost 35% in the last just several months here, that when you have strong momentum, it tends to continue until there is a catalyst. So right now we're going up. The Russell 2000 is a slightly different story. So this is a weekly chart again. And the Russell, let me just clear off my drawings from the daily chart. Unfortunately, they don't scale well. There we go. So the difference here on the Russell 2000, one, we are still in this consolidation range in the lower portion, the lower 50% of the chart. We still have a bit of room to go to all-time highs. We're still about 22% off all-time highs on the Russell 2000 instead of 4% on the S&P and roughly 4% on the NASDAQ. So there is room for some catch up here. I am waiting to see a break above this 2000, let's say 24 or 2025 level in the Russell 2000. And the RSI and the MACD are actually still confirming bias, showing positive bias to the upside here, and they are improving conditions on the weekly chart. Now, if we drop this into a daily chart here, you can see right here we had a high of about 31 on the MACD. Right here we had about 29.2. So we did actually have slowing momentum on this as well, and we did set a new pivot high on the RSI. So kind of conflicting signals between these two. The RSI is saying, hey, all systems go, we're going up. The MACD is saying, hey, we might have a little bit of pause or consolidation in us. Whenever I see conflicting views between these two, I look to the chart as the tiebreaker. And right now, because of the solid resistance around that 20,000, 24, 25 level, I am kind of anticipating us pushing up, testing that, and hopefully hovering underneath that, putting in a high base for a few days underneath that, and then breaking to the upside. If we do break above and close above that 2025 level, I will be specifically looking in the NASDAQ for trades for this coming week and the week after, looking for that catch up, like I was saying, from this weekly chart, the breakout here. We could see a pretty quick run to 2100 and then beyond, maybe up to about 2150 before the next real resistance coming in from the bottom here that acted as support a couple of years ago. Rounding it out, going down to the Dow Jones. Dow Jones is nearing all-time highs as well. We are only about 3.5% from all-time highs. We did finally break out above this resistance zone, so it is all systems go. Weekly chart, RSI and MACD are showing some positive bias. And if we drop into the daily chart, also positive bias, higher pivot high on the MACD and also higher pivot highs on the RSI for the Dow Jones. So right now, honestly, I would love this to take a little bit of time off, consolidate a little bit more, and then make that push up another 3.5% to all-time highs is what I'm kind of looking for in the Dow Jones. Going out to gold. Gold kind of got the shit kicked out of it this last week, pardon my French, but we got a lot of really good economic data and basically just signaled, hey, despite all the uncertainty moving forward, despite supply chain issues, despite China still having a hard time with their reopening from COVID and all of that, believe it or not, they're still struggling with that. All of the rate hikes that the Federal Reserve has done has not slowed down our economy as much as was anticipated, and the likelihood for a deep recession has continued to abate some. So gold took a hit on that because gold is kind of a safety play, and if people don't feel as much of a need to buy into safety, then they're probably not going to be buying in as much into gold. I do like the levels here for potential long-term purchases. If we take a deeper dive here back down to the 200 period moving average on the daily chart, I will look at that as an opportunity potentially to add to long-term positions. But there's not really much in terms of the swing trading environment on gold. Going out to crude light futures. Crude light, we've been looking at the break above 80 for a while. We are hovering just barely above 80. And if we drop this to a weekly chart, you can see we are still kind of in this mess from it trying to bottom. Any real trades are still going to take a while to develop, but there is room on the daily chart to potentially play a breakout here and then running back up to the previous resistance around $83.50. So if you do want to play crude light, there is a little bit of a pocket there. A little bit harder to find a stop that has a good risk to reward ratio unless you go intraday. But keep an eye on crude light and as similar industries for that, you know, Chevron, ExxonMobil, all of the oil and gas companies basically should be showing some positive bias right now. Finally, on our wrap up here, going out to Bitcoin, nothing really to see still. If we do get a breakdown below this 50 period moving average that's currently around 29,100, we will probably see further depreciation. Right now, we are being held down and suppressed by this decreasing 9 EMA quite drastically. You can see how many times that has been tested over the last 2 weeks and just continues to act as resistance. If we do get a close back above that, it would signal potential bullish environment coming back into play, but we do have the decreasing 20-period moving average right above it. So it's going to be hard to play anything here except maybe some day trades for the foreseeable future. Going out to the weekly chart, the weekly chart actually looks much more interesting to me. You can see we've come down, had a hammer candle testing the 9. If we broke above the high of this hammer candle from last week, around 30,135, that could be potentially interesting to me. It's going to depend on the daily chart, how that sets up and how long it takes for that to happen. If we get a few more sideways days here underneath the 9 and allow this 20-period moving average to kind of come down and converge on that 3,100 level and kind of line up with that a little bit, I would be much, much more interested in that. But right now it's about 30,325. So we have a couple hundred points and we need to see that moving average drop to really get me interested in something there. But if this does continue to go sideways between the 9 and the rising 50 here for a few days, Bitcoin might wake up and we might be able to see a potential play there. Finally, I don't always cover the metals here, but palladium is continuing to be interesting to me as a potential bottoming pattern. It has just gotten the living crap kicked out of it here. We have a fairly significant resistance, or excuse me, support zone just above 1,200. If we see confirmation back up above the pivot high here, I will start to potentially get interested in platinum. And then last but not least, palladium. Nothing really to see here. Long term, we are still just in this kind of choppy mess. You can see this kind of pennant formation. Not a whole lot to see on the weekly chart. If we do drop this into the daily chart, technically we would have done a double bottom right here. You can see these two kind of wick lows rise up. If this holds, this could be a new higher pivot low on the longer term and then moving higher. But because of this slope we have right here, and the down pressure from this 50-period moving average, I'm assuming that any rally here is going to get met with some selling pressure right there. So we need to see how this works out. It's going to be a couple of weeks before this is very interesting to us. Finally, let's go out to our economic data for the week ahead. Nothing on Monday, so we can rest assured that any trades we take, we won't have to worry about economic data coming out and screwing us over on anything on that. Tuesday, we have ISM manufacturing and job openings. Wednesday, non-farm roll. Thursday, unemployment claims. This is probably going to be the one that I'm looking at the most over the course of this week, just making sure that unemployment claims are still showing a strong, healthy economy despite the Fed continuing to raise rates. And then ISM PMI data coming out Thursday as well. Not really super concerned about Friday. I think the unemployment claims is going to kind of signal which way the unemployment rate here is going to go. I'm kind of anticipating it coming in right on forecast. It's been kind of stuck there at around the 3.6% for a little while, and I don't see anything really changing that. I'm guessing it's going to come right in around 3.6%, so I'm not really expecting anything on that. Finally, if we go out to the heat map here, this is a 1-week performance that shows profit and loss percentages for different sectors. Right here, we have technology, communication services, defensive, etc. And this is looking at price action from last week. So you can see we did actually get money coming back into some of the big name tech. That is because they reported earnings and the investors loved it. So anyways, we did have some money coming back into the tech sectors that had been beaten down. We'll have to see how that plays out. The charts are a little jumbled right now, so it's going to be kind of hard to pick individual trades in there. But like I said, I'm not really looking at tech this week or the S&P this week. Really, I'm going to be focused on the Russell 2000, looking for a catch-up trade. So anyways, I hope that helps, guys. As always, let me know if you have questions or if I can be of help in any way.